So what is supply and demand? Supply and demand is an area where smart money enters the market either as a buyer or as a seller. Price determination is decided by an institutional context in which retail traders like myself or yourself can employ proper concepts to track the footprints of these bigger market role players. So the difference between traditional support and resistance versus supply and demand is that supply and demand tend to be more fresh, untouched areas of interest that can potentially provide short-term liquidity or price power to temporarily give the market a reversal. As for support and resistance, they are mostly historical pivot price lines, and they worked before, so you assume that they work again. Order blocks are not like that. We don't reuse order blocks, especially following a break of structure. At least I don't, and I suggest you follow my advice on that. So what are order blocks then? Well, a bearish order block is what we call supply. A bullish order block is what we call demand. Order blocks were first coined by the Inner Circle Trader, ICT on YouTube. Can't take credit for the name order block, but since then, many folks, including myself, have made their own version of what they call supply and demand. I prefer to use supply and demand rather than the word order block, but sometimes I can't help myself and I call them order blocks, especially when I'm talking in like a course or on a stream. So if I say bearish order block, I'm referring to supply. If I say bullish order block, I'm definitely referring to demand. So, well, what are order blocks then? So order blocks or supply and demand, these will be zones that price marks as a level of interest and where liquidity was injected to be used at a later time. So when these key players, they move the market away, they leave these footprints for us to pick up on, right? So these market zones can aid in ensuring that when proper metrics are applied, we can capitalize off these areas of untapped liquidity. They either give support or resistance. It all depends on the market bias that we impose. Order blocks can provide very precise entries, and we'll look at a few different ways that order blocks or supply and demand can be presented. So here's a typical case of looking at supply and demand. We have traditional supply and traditional demand here. What do we see? Well, we see that structure on the purple drawing is, we'll call this our swing structure. We had a high, we had a swing low, we had a swing high, or lower high rather, and then following with a continuation of the trend, producing a swing low. When you have a situation like this, technically the last up move before the down move, or the last buy to sell, would be what we call bearish supply or a bearish order block, whatever you prefer. As for demand, when price is trending upwards and breaks structure bullishly, then you have a situation where there's a possibility of demand's creation. In this case here, price made a swing high, price made a swing low, also known as a higher low. Price therefore came up and made another swing high to follow. So what do we have here? Well, we have ourselves a bullish break of structure. Therefore, there is a possibility of demand creation. Now, if you went through my market structure videos, you may have seen that this entire zone here is what we call range-based demand. That's correct. As for this entire zone over here would be considered range-based supply. That is also correct. However, we're going to focus on traditional order blocks for the next couple of lessons. We're not going to talk about a whole lot to do with the range models. We're going to talk about the refined approach. So the refined approach is using an order block or a order block with imbalance. Okay. So in this case here, we will actually go with, hey, this was a bearish colored candle between the high point and the low point here. There was a pullback that created a bearish candle. And we'll say that this was a pullback that created a bullish candle. The buy before the sell, and the sell before the buy. Therefore, demand has formed. Therefore, supply has formed. And quite notably, you will see this very often, that most times when you have a bullish or a bearish break of structure, there's always a way to find an order block, right? Now, whether you have to change timeframes to find one, which can be quite overwhelming for newer traders, especially because they start drawing out every single order block that they see. I don't do that, right? Especially if it doesn't follow with my market structure teachings and the order block is ridiculously far away. What's the point of looking at it? I mean, you can still use it later on, I suppose, as long as you're being careful with your market structure, but we're not going to take it from the advanced approach. We're going to take it from the very basic how to identify approach. So we know how to create supply. We know how to create demand. or traditional supply and traditional demand. So let's take a look at the Bitcoin chart. Let's go back with the bar replay tool, and we will go to the weekly chart. All right, so we know what supply and demand looks like. Now, how do we identify it in a live environment, in an actual candlestick environment? Well, let's take a look here, shall we? So as you can see, this is a weekly market structure trend. And if we took our path tool, price went up, price came down, price came up, price came down. You have these internal moves here. We can draw out the internal swings. Actually, technically, it would be this probably on the daily, but we'll look at this in a minute. But we can draw in these swings here. If we see something that may be a different time frame, we can draw that in as well. We're just trying to do basic identification. We don't care if we're sticking to the 2-candle rule. If you watch the market structure series first, that's fine. We just want to be able to identify order blocks, and that's the goal here. All right, so traditional order blocks. Do we have an order block from this break of structure? Well, I don't see an order block. Many folks may call this the weekly demand zone. Well, we have a weekly demand or weekly bullish order block right here. Technically, it worked, sure, but this is the kind of order block that I refrained from using because technically you got more than one candle trading within it. If you're going to refine, why not just use a whole range-based model in that case? It's kind of silly. Could you narrow this down and pinpoint an order block with imbalance within that move on a lower time frame? You could. And there may have been something hiding within, say, the wick of this candle down here, because that's the last down move in that area before that up move. So there very well could be. We're not going to check that just yet. We'll go through the rest and we'll go back to that. So now what we see is that price made a high, price made a higher low. So there is no bearish break of structure that exists here. So can there still be supply? Well, yes, there can. But again, your target's not going to be unrealistic. All right, well, let's draw in the internal swing. So we went down, we went up, and we went down again. So every single time that you break structure like this, whether it's internal, primary, fractal structure, it doesn't matter. Supply and demand can create itself. In this case here, where's the last up candle before that downswing? Well, that would be right here. This would be the last up candle. And this is not just your everyday order block. This is what we call an order block with imbalance. If you watch the fair value gap videos first, which I hope you have, then you would know that this was a fair value gap that was created following the order block. That's what I like to see, right? I'd much, much rather use an order block with imbalance if I'm trying to trade traditional order blocks. They represent more of a smart money approach, in my opinion, meaning that if the imbalance was created, then in theory, there's more than likely institutional involvement. Whereas if there is no imbalance created or inefficient price action created, then what's the big hype over using that zone? So you will have higher success using order blocks that have one candle inside of them. That makes your life so much easier, doesn't it? If there's one candle of the opposite color inside your demand or supply zone, then what that tells us is that there's an imbalance, okay? Very simple. That's how you know if there's a fair value gap or an order block with imbalance. There's one black candle inside of my gray candle, which is my supply zone. So that is an order block with imbalance. Okay, now price came down, and then you had some sort of internal fractalized structure here as well. So if we continued on with that, we'll use red structure for this. So if we continued on with the red structure drawing, it came down to this point, came up to here, took that low, and then broke up again. So there we go. Once again, we have a break of structure, and we have a pivot point demand zone right here. All right, so let's draw that guy in. And once again, as you can see, there's only one colored candle of the opposite color within that green box of mine. That's a good demand zone. Okay, I like that a lot better than picking something like this guy over here because he has way more than one candle within him, which could also indicate, not only could it indicate, lack of smart money involvement due to the lack of inefficiency, but it could also indicate to us that it was pre-mitigated, meaning that all the orders were picked up in that zone prior to the break of structure, which isn't the best sign. So let's not use those. All right, so in this case here, this guy provided a reaction. This guy clearly provided a reaction. Now, these are actually pretty big reactions if you measure them. Like this guy's $13,600, and that guy would have been, but the same actually, $13,520. So as you can see, these are definitely valid point of interest to use for a later time. Would you trade them directly? I mean, probably not. Maybe if you're a spot trader, you might. But usually you would look for other confirmations within these zones. You wouldn't just take them blindly, or at least I wouldn't recommend taking them blindly. So we clearly were able to identify a supply zone, and we were clearly able to identify a valid order block with imbalance from a demand perspective as well. Let's keep going through with this example. So now price decided to come up. I'm actually going to use the red for the internal structure swing here. I should have done that the first time. And price came down and made this higher low, and then it came up and broke structure once again from left to right. So the last down candle before the boss or the break of structure would be what we call demand. However, as you can see, it's slightly wicked into here. So this is not something that I would have used on the weekly chart. How could we use this? Well, what we could do is, first of all, let's set the replay right here. How we could look at this is we could go ahead and drop down a few time frames to see if there's a chance that an order block with imbalance could be a little bit smaller in this zone here. So in the 3-day, you cannot use this guy, which is the last down candle. I wouldn't use this guy because, again, could this be pre-mitigated due to the pullout and possibly pull back in? We don't know if that exists here. So I'm not going to chance that. Daily, on the daily, same situation. This ends up being the order block right here. And you have that same predicament where you don't know what actually occurred. It could have whipped in, whipped out. Yeah, we don't want that. What about 18-hour? Same situation. 12-hour. Oh, okay, now we're talking. So we have a 12-hour candle that created inefficient price action because there's only one single candle inside of it of the opposite color. That's what we want to see. So if we drag this guy over, if we draw our market structure point correctly here, it looks like it actually wicked off that 12-hour block. And it has. So you actually produced a pretty decent move up here, almost $9,500 based on that 12-hour block. And that's a very easy way to refine your order blocks, right? But refinement's another thing that we'll be discussing in a later video. We're just focusing on the very, very basics today. So let's go ahead and look at the high. Let's continue on with this red drawing. So price went up. Price definitely pulled back here. Even though it's not two black candles, which is my typical rule, I realize that it would be on the daily or the 3-day. So I'm going to go ahead and use that. Kind of combining my structure drawings, but that's fine. We just want to identify. Then clearly we produced a bearish supply zone because we have a break of structure. Now, whether or not it's a valid supply zone to trade from, I don't know yet. We got to find that out. So, oh, look at that. It is. We have one bearish candle inside of it, which is what we want to see for a valid supply zone. This is a valid refined order block with imbalance. Did price hit that order block with imbalance? No, it never came back. Can we look at this way down the road in the event price makes its way back up to $62,200 or up to $68,700? Absolutely. In fact, you would be surprised with how often these older zones still hold. I use them all the time. I have always used these older POIs in my trading. So we know that's a valid supply, just did not get mitigated. Okay, can we go further with this? Well, we could, but we're kind of running out of order blocks here. So here's an interesting one. So if we actually zoom in a little bit here, you can see that price made its way down to this low, hitting that 12-hour demand zone. It then started to move up, and then it broke down again. But as it broke the structure this time, technically the order block that was created was right here. It's a 2-candle block. So if I actually drew this guy over, you can see that you have 1 and 2 black candles. So we wouldn't use that on that time frame, but this is where we would go down to another time frame. Let's go to the 3-day. So on the 3-day time frame, where's your last up candle before that down move that broke your market structure? Oh, look at that. He's right here. Does he have 1 candle within? Yes, he does. Did we get a nice reaction off of that guy? Yes, we have. Right? So once again, we are seeing success of the order block. A huge move. Absolutely huge. In fact, this order block still held its ground the entire way over, even on the retest. Why? Well, because it didn't break structure. Structure was supposed to break under here. So on the first move down, we didn't break that structure. So price came back up, which it's allowed to do, by the way. It can come back into an order block like this again and still maintain the effectiveness of the order block. It's just after the break of structure, that's when you would cross them off your list. So we didn't have a swing break of structure here or an internal break of structure. It was basically just this internal uptrend. So we identified another bearish order block with ease, and we'll actually look at this again. So price came down this time, producing a low or a swing low. Let's go back to the weekly. And as you can see, you had this swing move up here and then another swing down. So we have a possible bearish supply zone. Okay, we'll draw on the break of structure. The last up move before that down move that broke our structure is the bearish supply zone. We can draw him over. Did we receive a reaction off of this? Yes, we have. Although not the best reaction in the world, it's still a reaction. 20% of a move. So as you can see, these order blocks with imbalance, they work, right? Is it easy to get lost in the lower time frame ones? Well, yeah, let's take a look at how easy that would be. Let's go down to the 1 hour. So what I suggest is build context behind your order blocks. Don't just say, okay, I'm going to draw from this high all the way down to this low right here. And we're going to draw in every single order block from the 4 hour down. We're going to go ahead and draw one in here. Can we verify an order block up here? I don't see any because there's nothing with one candle inside of it before a break of structure. But there is right here. That was a valid break of structure. And ultimately you had that little guy here, but he had 2 candles inside of him. He had a big black candle here and a wick inside of him. So you wouldn't have used this guy on the 4. Could you have used him on the 2? Well, actually, yes, you could have. So in this case here, but the wick missed it ever so slightly, unfortunately. But if you looked a little closer here, you would have also seen on a lower time frame, there was more supply created between here, the move up, and the move down. So what did price hit? It didn't hit the upper block. It came through the lower block. It wicked it ever so slightly. That can happen. Sometimes on Coinbase, order blocks are not the best to look at. That very well could have been the case here. So my rule of thumb is, if I see an order block being created, a supply zone, for example, an order block with imbalance like we've been drawing out for the last few minutes, and I see that the wick trades a little tiny bit higher. If it's only like 25% or less of the candle size of the supply zone, I usually include it. Because what can happen is you can actually have unmitigated supply in the contents of that wick. And look very closely. In this case, I would say that was probably the case. If you were on the 3, the 5 minute time frame, even the 1 minute time frame, there could have been a remaining unmitigated block. So does it hurt to include the bigger block as I mentioned earlier? No, it does not. So in my opinion, this is still a very successful supply reaction. Price mitigated supply and had an impressive dump down. Very, very impressive. Thousands of dollars. So let's continue on. Price formed another swing low, a swing high, and a break of structure to follow. This is an interesting one because you have what could have been a supply if it had one candle inside of it, whereas there was no way to really verify that because, it broke structure here. I mean, if you want to call that a supply, it's kind of overlapping your break of structure line. When I see a situation like this, it is okay if I see something that justifies the down, the up, and the down again on a lower time frame in that area. I don't have to rely on this 2 hour structure. I can confirm that using whatever time frame structure I'd like to, which is something that a lot of people don't know with order blocks. Like if you can't confirm it on one time frame, go ahead and use a different time frame to confirm it. That's fine, as long as you can confirm it. So in this case here, we don't have any supply at all on the 2 hour. What about the 3? Nothing on the 3. What about 4? Nothing on the 4. 6, 8. Okay, nothing. What about the 1? So there was a supply zone on the 1 hour time frame, but it didn't do anything. And that would have been right here. And you could have included that wick. Basically, price shot right through that supply zone. So that's our first failed supply zone that we've seen so far. So we had a failed supply zone. Now, why could that be? Well, perhaps the reason why is this zone doesn't look very good. It's wicking all over the place on this end. It's wicking all over the place on that end. What did the supply zone do? We'll be talking more in a later video about how to make a better supply and demand zone, obviously, when it comes to order blocks with imbalance or even range and pivot created models. But in this case here, I would say that, it didn't really look that great. It didn't do anything. It didn't take liquidity. It didn't really do a whole lot. But either way, is it okay to mark that guy in and look for a structure change coming out of him? Yes, it would have been. Okay, it would have been fine. Did we get one? I would say no, because price went up, down, up again. It looks like it came into something over here, but we don't know what. So is there a chance that there was no supply there? Yes, there's a chance because this entire area is technical supply. All right, 45. And of course, there was a 45-minute block hiding about that we didn't notice because we didn't do all our TA first before looking at the result. So in this case here, you had a supply zone that was created. How was that supply created? Well, you had an internal up and downswing with a break of structure. Was this the last up candle before that break of structure line? Absolutely, it was. Was this a valid order block to trade from? Heck yeah. that was a really good order block to trade from. In fact, you could argue that there were attempts to push price into that supply, and this was indicative of supply holding because ultimately whoever was in this area here, they didn't want price coming back to their entry just yet. They wanted to actually hit an objective first. And then from there, whoever entered on this area, they were trying to project their positions clearly based on this reaction. So in this case here, we identified proper supply once again, and we found a failed supply zone along the way. So I will tell you guys that when you have supply that doesn't really look like it has great structure to it, and it's kind of just in the middle of nowheres in an uptrend like that, or demand, rather, that's in the middle of an uptrend like this. I guess I should have used demand. Yeah, we'll go green. So when you have demand in the middle of an uptrend and you try your best to go to various time frames and you really can't see much like that, maybe on the 1 minute you do, but that's about it. And you're looking at like 1 hour structure, for example, and this was a 15 block, then really, you got to be careful with these guys, especially because it's not inside the break of structure here, right? If you have a break of structure block here, and that's a valid order block, well, then you're going to put more emphasis on this block than you would on this block. Always, okay? Always. Structureless blocks or wiki structure created blocks are not really my favorite block to mess with, especially when you have a situation like this. You see how it's wicking all over the place? I mean, I prefer rather to use this entire range supply rather than just going to that little order block there. You can still watch them, just be a little bit more careful and cautious with these ones. So, all right, we found, our answer so far. Could there possibly be demand now that we see a bullish break of structure internally because price went up to here, price came down to here, and price went up again? Well, let's see. We have a break of structure here, and we'll go to the 2 hour. I don't see one yet. Oh, look at that. There's a 2 hour demand zone with one candle inside of it. Okay, price held temporarily off that demand zone. Ultimately, that demand zone, it was not able to put in a higher high. Whether I'm talking about a higher high past this high or even past this high, it didn't do either or. So what does that mean? That means that demand failed. Okay, that's not a great sign. And price ended up coming back towards this low over here. So looking at this once again, price looks like it came into something down here. There may have been an order block that we hit on a lower time frame, and let's figure that out. Yeah, it looks like it might be something on a lower time frame. Hopefully it's not too low of a time frame that we can still see it, but that could be the case. If we had to go under the 10, we might not see this. So actually, there was something right here. There was a 10-minute order block right here. And why was that a 10-minute order block? Well, because technically speaking, it is the last down move as it has a wick down before the move up. Although it's a gray colored candle, zoomed out, it looks like a black candle, doesn't it? But when you zoom in, it's still a gray candle. So when I have a situation like this is my exception to order blocks. When I see a situation like this, as long as I can confirm it as an order block, it's still valid demand. So I went up, down, and then up again, breaking structure to the upside. Therefore, you still have the potential for demand, realizing that this entire area is a range demand model. Now, it was slightly mitigated on this wick here and this wick here, and this is the only thing that's remaining at the time. So what you can do in a situation like that, as long as it meets the criteria of having one other candle inside of it, it's basically just a line. We call these line blocks, or at least I do. I call it like a line-based block. It's like a line or a plus. It looks like a weird-looking cross. When I have that situation and I really zoom in, even if it is the same color block, I will use that as a demand, right? That's still valid demand to me because it's the last time that price tried to move down before that break of structure upwards. You will not see this very often, so don't panic if you see that. It's fairly rare in comparison to your standardized order block, okay? So that is a valid demand zone, and it looks like price may have actually hit that order block area and produced a break of structure, which it has. You came down, up, down, up again, breaking structure, therefore possibly producing another area of demand within here, another break of structure here, maybe a bigger one in here. So let's take a look. So we actually have price created yet another bullish order block. The question remains, does it have to come back to that order block? No, it doesn't, because price went up, down, and broke up again. Even though it's wicking down, that doesn't mean it has to come back to this block. Sometimes you do not come back to it. But we're on the 45. Could there be a bigger block? And should we draw in the bigger block? I mean, I would, right? Because I want to know where the biggest area of demand is. Little tip, little pro tip. What I do is if I see a big candle engulfing of the opposite color, engulfing, like for example, 3 bearish candles like this, I know automatically that this is like possibly a 2-hour block and a 3-hour block right there, because it's 3 1-hour candles. And even if it doesn't end up being that exact rectangle on the 3-hour time frame, I will still use this as demand. I know that this is still demand. If we went to the 3-hour, it might be a 3-hour block. Oh yeah, look at that. This time it was. So it is a 3-hour block. But look at this. If you went up even further, you're still engulfing all these candles here. Okay, so could it be a 4-hour, a 6-hour, maybe an 8-hour block? 12-hour block? 18-hour block? Actually, yeah. I mean, if you took it to the bottom of that wick, it technically would have been, that's your standard 18-hour block, and it's making right now, but you also went down to there. Now, that's an unconfirmed 18-hour block because the 18-hour block didn't break structure. So we can't use that, right? Whereas even these bigger blocks, they didn't break structure either. So you got to be careful. Did it break structure or did it not break structure? So for me, I can use the 3-hour version down here because it broke something from left to right here, and it broke something from left to right here. That's fine because I'm looking at it using my 1-hour structure, but I'm not going to push my luck and use the same rule to confirm like a huge zone like this using that 18-hour block. That doesn't work. And besides, it's way too big. So if it's way too big, then maybe you want to reconsider, because in that point, why even bother even drawing your order blocks out? You may as well just look at structure. So what we're seeing here is a retracement down. There was a supply zone that was created internally. So down, up, down, across, and we had a bearish supply. Did that bearish supply hold? No, it has not. Price went directly through it. First of all, it wicked off of it coming down, and then it went right through it. So that's no good to us. But if demand ends up being created here, like it has been, we can look at this guy right here, right? Because now we know that we have a structure change from left to right, and this could actually present itself as a possible long opportunity. This is called a flip. You're seeing supply fail and demand create itself in this place of supply, which is usually a good indication. So you actually produce a break of structure following that order block's reaction. So if price comes into that block now, you would have to follow your market structure. You cannot base this and say, oh, I'm blindly longing this order block right now. You wouldn't do that because it would actually break structure to do that if it closes below this point here, right? So this actually worked out, and then price came down for one more wick, it looks like, into that block, and then went lower. So unfortunately, there was a scalp trade off that block. We'll measure it, almost a $500 move up, which isn't too terrible. And then ultimately it failed, right? That's fine. That happens. You can't expect the moon off every single order block that you identify. Was there more supply created here? Well, technically, yeah, this is a trickier one to identify, but if you look closely here, there was a up move before that down move that broke structure, and this would have been it right here. But where's the structure break? See, this is a little bit tricky because it wicked the structure. So this is what I call an unconfirmed supply zone based on 1-hour structure. So if you follow this up, we went up, down, up, wicked the low. Because you didn't get a 1-hour break of structure here, you could try to confirm this on a lower time frame. You just have to be a little bit more cautious with supply zones like this, right? Because what do we know about wicks? We know that a wick could indicate a possible weak targeted level. So be extra cautious with these supply zones. If you went down maybe to a couple of lower time frames, you might have a break if you're lucky. It's barely a break, but it's still possibly a break here. Like a very, very micro break under that line, as you can see. Maybe that was good enough for you that you said to yourself, well, I'm actually going to use this now. I'm going to go with the 45 block because it looks better on the 45 because that's where it broke structure. Maybe even on the 30. Oh, I can't use that on the 30 because it's more than one candle inside the block. What about the 15? Oh, can't use it on the 15. It's more than one candle inside the block. Or maybe you're the kind of guy that would rather use, guy or girl, I should say, that would rather use a range-based model. So we have the up, the down, over, and we know this is now range supply. So I hope that makes sense on identification. It's very, very easy to identify an order block, but one very, very important thing that I would like to mention, there are indicators that draw order blocks and fair value gaps and what they say are OBIMs out and all this nonsense. But I'll tell you guys, there's not an indicator out there that draws structure like I draw it. I promise you that. They mess up all the time, and I highly suggest you do not get lazy with order blocks and you draw them yourself. An indicator cannot be programmed in that way. It would have been done already if that was the case. So I highly, highly suggest, just put the work in, identify this stuff yourself. Don't trust your money on some script, right? Don't do that. You want to do